So you're ready to invest in rental property, but which strategy will you use? With the advent of Airbnb, VRBO, Furnished Finder, etc., traditional long-term leases are no longer your only option. Today, I want to walk you through 3 residential real estate strategies: long-term, mid-term, and short-term. We'll define each one and talk about the highlights and the headaches so that by the end of the video, you can decide which strategy is the best fit for your goals and lifestyle. Strategy number 1, the long-term rental, or as I like to call it, the tried and true option. Typically, leases on long-term rentals are 12 months or more, and a tenant is moving into this property as their normal everyday home. They live in a particular place, they work there, and they're going to be living in that home. They furnish it themselves, put things up on the walls, and they'll live there for at least 12 months. Oftentimes they renew and will stay somewhere more than 1 year because moving every year is difficult. So this is a traditional long-term lease. The pros of this, as you can imagine, is stable income that you know will happen every single month for at least 12 months, if not longer. On top of that, you have less tenant turnover than in the mid or short-term options. Hopefully you are only turning tenants over every couple of years, because oftentimes in my portfolio at least, I see tenants renew at least once or twice. So really low turnover compared to the other strategies. It's also generally less management intensive. When you have someone who moves in, they move all their furniture in and they're just going to stay there for the long haul. In my experience, I may be getting calls from each tenant a couple times per year about something that I need to go fix in their property. This is different for midterms and short terms, where you're providing furniture, you're covering utilities, and there's a lot more things that can come up with those tenants over time. Finally, it's easier to finance long-term rentals. Long-term has been around forever. All the lenders out there understand long-term rentals, and it's much easier to build the case for the rents that you can make long-term with a property versus setting up a midterm or short-term situation, which may be a little more dicey in the eyes of the lenders. So I think it's much easier to get financing on a property when you can show how it will rent long-term and make money. All right, the cons of long-term properties. First of all, you just have a lot less flexibility. Once you put a tenant in place with a 12-month lease, you can't change the amount that you're charging them halfway through the lease because costs have gone up. You can't get rid of the tenant easily if they're a problem tenant. You might actually have to go through an eviction process, versus in a mid or short term when you know you only have to deal with them for another month, and then once they're gone, and you can move forward hopefully with a better resident in the future. With long terms, you're locked in for a while, so you have to make sure you're happy with the amount that you're going to be making on that rent, and if you're not, you have to wait until the end of that lease term to make those changes. This can also leave you in a situation where you're losing potential upside. If the market shifts, if rents start to get higher in your area and you just locked a tenant in a couple months ago, you're going to have to wait for at least 10 more months to make that rent raise. And for these reasons, as well as the fact that you're not providing the additional value of furnishings and utilities and things like that, we tend to see that the cash flow opportunity on long-term rentals is a little bit lower than midterm and short-term. Now, this depends on the market and several other factors, but generally speaking, long-term rentals tend to be on the lowest end cash flow-wise out of these 3 strategies. Strategy number 2 is midterm rentals, which I would think many people would call the best of both worlds option. It has a lot of the benefits of long-term and benefits of short-term, but still it's got its own pros and cons, so let's walk through those now. So the way I would define a midterm rental is you're looking at least a 1 month or 30-day stay to begin with. Usually you're starting somewhere between 1 and 6 months when they first move in. It can be extended, so it can end up going longer than that. But usually you're bringing in travel nurses, corporate professionals who need to be in a certain area for an extended period of time for their work, or relocating or transitioning families. Sometimes it's because of insurance claims and the family can't live in their own home for a while, so they need a midterm rental where they can stay while their home is being repaired from whatever damage has happened. So the pros of a midterm rental are generally you're commanding higher rents than long-term rentals, and this is due to the fact that it is furnished and you probably are covering some, if not all, of the utilities while they're there. It's also a high need when someone is traveling for work or because they're in transition. However, when you compare it with short-term rentals, you do have lower turnover and less wear and tear. It's not people coming in town for the weekend for a concert or for a bachelorette party or something like that. that. So turnover and wear and tear is still lower than short-term rentals. You are generally attracting professionals, so it's travel nurses or people who have to be in town for a few months for work. So you're generally attracting people who have the income and resources, and they're in a professional setting. That's why they're coming in. So they're pretty high quality tenants on average. And final pro of midterm rentals is generally there's a lot less regulation as compared with short-term rentals. We'll get into some of that in the next section, but I don't see a lot of people dealing with crazy regulations or additional taxes and things like that for running midterm rentals, at least not in my area. Now, the cons to midterm rentals, you are looking at more turnover than a long-term, and that means marketing costs, cleaning costs, things like that. Furniture and utilities are usually included with the midterm rental, so you have higher upfront setup costs to furnish the property and higher ongoing expenses, though we do see that these are usually more than offset by the higher rents you can command. There is a smaller tenant pool than long-term rentals. Obviously, there's a lot of travel nurses these days. There are people needing a place to stay during an insurance claim. That is happening, but it's just never going to be as many people as are looking for just a traditional rental to live their daily lives in. And finally, your income can definitely fluctuate more than it can with long-term rentals. So if you are getting people who are coming for 1 to 6 months, you have higher turnover, you have more opportunity for vacancy, and that means more fluctuations in your income. Strategy number 3 is short-term rentals, or what I would call the higher risk, hopefully higher reward option. So short-term rentals are generally nightly or weekly stays at a property, and usually you're using a platform like Airbnb or VRBO to market these properties and get people to come through in more of a hotel style. This is a hospitality business when you're doing short-term rentals. So the pros of short-term rentals, as you can imagine, people get really excited about short-term rentals because of the higher income opportunity. I would say this could be the highest cash flow strategy, but that really depends on a lot of factors. So it's really only a potentially higher cash flow strategy. It depends on your market, what kind of demand there is for short-term rentals, how saturated the market is. Are there a ton of people who have started short-term rentals because they're excited about the higher cash flow, but now there's so many options that prices are dropping? So potentially the highest cash flow situation. Another pro is you do have the flexibility to use the property on your own. So if you live in the middle of the country and you really want to have a home in the mountains or a home on the beach, but you're not going to get to use it more than a week or two per year, you could use this as a short-term rental and then get out there to use it on your own once or twice per year or however often you want to go. But it's kind of a cool way to house hack a vacation home for yourself. Another pro is that you can adjust your pricing seasonally or even daily. So you can be really, really reactive to the market dynamics. And if you're seeing that prices are dropping, you can adjust to make sure you don't have too much vacancy. Or if prices are going up, you can adjust to make sure you're taking advantage of that upside potential. And finally, as you can imagine, this is just a great option if you're in a really touristy, high demand area where there's a lot of people coming through either for sightseeing and vacations or for some other reason. Each market can have kind of surprising reasons that there are a lot of people coming through on a short-term basis. So if you're in one of those markets, then this could be a really great option for your rentals. Now, the cons of short-term rentals. Highest income potential comes with the highest expenses and turnover costs. So as you can imagine, short-term rentals, you could be turning these over every 2 or 3 days or every week. That's a lot of cleaning costs. That's a lot of marketing costs to add into your budget. You also have other higher expenses, again, when it comes to furnishing and covering all the utilities needed for that rental. Another con, and I think this is the biggest one to keep in mind, is that you could be subject to some pretty heavy local taxing and regulations. Sometimes places start out okay with short-term rentals, and then people in the area decide they don't like the short-term rentals. They don't want to have people coming to the house next to them or the duplex next to them and partying all weekend. So people start to get together and decide that they're going to work with the government to ban short-term rentals in an area. Even the hospitality industry and hotels have gotten into the fray in some situations. So there's a lot of additional risk in terms of regulations and how those can change over time. So if you buy a property and it only cash flows as a short-term rental, and then short-term rentals get banned in your area, you can't even make money as a midterm rental. You've gotten yourself into a bit of a situation. So really watch those local regulations and make sure that your rental could perform well as a mid or long-term rental if something happens and you're no longer allowed to short-term rent it. Similar to midterm rentals, another con is that your income can really fluctuate based on seasonality. It's just a lot less predictable when you have people coming and going every couple days or every week. So a lot more fluctuations and ups and downs with your income as a short-term rental. And finally, if you're doing short short-term rentals, you're really setting up a hospitality business. You're going kind of above and beyond a traditional residential style of running your business, and you're in hospitality now. So this comes with a lot more management intensive work, a lot more communication with people. It's gonna be even more hands-on than any of the other strategies that we've talked about today. So those are the pros and cons of the short-term rental strategy. So where do you stand on these three strategies? Personally, I love my long-term rentals. I love how simple it is. It's not as management intensive. It's tried and true and will be around forever. So I plan to keep 80 to 90% of my portfolio as long-term rentals pretty much forever. However, I am in the midst of furnishing my first 2 midterm rentals. I do believe that it offers the best of both worlds. So I'm gonna go ahead and try that out here in my market. And in the future, I could see potentially house hacking 1 or 2 vacation homes for my family in different areas of the country. And in that case, I would go ahead and try short-term rentals. But personally, my plan is to stick primarily with long-term rentals and use mid-term rentals to boost my cash flow just a little bit. Long-term rentals as more of a long-term lifestyle investment for me and my family. Comment below and let me know what you think of these strategies, which one or which combination of these strategies you want to use. Make sure you let me know if there are any questions at all. Like, share, subscribe, and as always, keep learning, keep growing, and have fun.